Welcome to Dividend Talk, podcast episode 54. Fresenius Dividend Stock Review. Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host European eDGI, and today I'm joined with Phil Segler. Phil Segler, as you know, is our regular guest on the show, specifically when we are on holiday, and EMF is having a great holiday. If you don't know this podcast yet, this is a podcast where we discuss our passion for dividend growth investing with our own unique European flavor. If you're new to this channel, please hit the like button and subscribe to us, and check out our previous episodes on YouTube and Spotify. See you on the inside. Hey Phil, welcome back. Thank you so much for being our co-host today while EMF is enjoying his very well deserved vacation. How are you doing?
I am doing great. Hello, eDGI. Great to be here. And yeah, I gave you my word the last time. Whenever you need me, I'm here.
Well, super. I really feel like you're already making us the Three Musketeers. So good. Thank you. Hey, like you know, we always start with the news of the week. Is there anything that caught your attention this week?
Yes, definitely. And I'm also interested what you say about it, because you are Microsoft shareholder, right?
That's correct.
What do you say about the new Windows 11 release? I mean, to be honest, it came out of the blue for me. I did not see any big event, no hardware announcement. Just suddenly, Windows 11 will be there.
Yeah.
And yeah.
So I don't know about the details about it. I'm just so biased, you know, that everything they do turns into gold at the moment. So I'm really happy with the company, and if they feel they need a Windows 11, they need a Windows 11. I'm a little bit surprised by it in such a way that I was thinking that they stopped thinking in these kinds of names and numbers, like it will be like Apple, a continuous update. So, but I would need to look into the details what this really is about. If it's just an update, then it's perfect. But if it requires people to reinstall their whole laptop or something like that, I would be a little bit disappointed, because I thought that they left that era behind them.
Yeah, to be honest, I also don't fully understand the details. I mean, there will be some new features for sure. Apparently, you will be able to run Android apps on your Microsoft or your Windows installation. There will be now a new start menu. The icons will be in the middle of the taskbar versus in the lower left corner. So certainly interesting, but yeah, why a new Windows version? I also don't get it, to be honest. I somehow got used to the fact that you just have Windows 10 and get your frequent feature updates without big hassle of a new installation. So yeah, let's see what it brings.
Yeah, well, I'm sure that Satya Nadella thinks about us as users and consumers of this software. So I'm sure that he wouldn't take such a decision lightly if it's really something new. So maybe what I really caught my attention this week is like the S&P 500 is again at all-time high. I mean, they're having an all-time high every day, yeah, because it's simple. If you're at all-time high, that keeps on going, but it's every week in the news, right? And sometimes I'm wondering, like then what is this then compared to the European stocks 50 index? Because this one, the stock index, is now there at 4,000, but it was also at 4,000 in 2000, yeah, and actually in 2000 it was at 5,000. So if you look at the price chart of the European equivalent, let's say of this, it's gone nowhere over 20 years. And this is really interesting for me. Like, is it just America that is so much better in business execution? Because we have some really nice, great companies, right? And these are the top 50 companies of Europe. Is it that? Yeah, what is it? Do you have any thoughts about that?
Well, I looked into this topic some months ago, and some economists actually see a little bit of parallels, with the development in Europe, what you had with Japan some decades ago. time of boom is a little bit over, weak secular trends, not a big population growth. So it could be really that some fundamental economic parameters are not speaking for Europe as a continent. But indeed, I mean, there will be still be good companies in Europe. I mean, that's I think two different topics, right?
Yeah. So if you look at the composition of this index, you've got the Unilevers there, right? They get most of their revenue from international. So maybe there is also something when you look from a European point of view, that they are more impacted by regulations, dividend policies. When you look at the banks and such, that puts the market cap lower and such. So I find it just really interesting that if you look at the S&P 500, it's really an exponential price chart, and when you look at the Euro Stoxx 50 is more like crocodile teeth. Yeah. So I find it really interesting, and it just shows again how much different it is to invest as a European person. Of course, we're not necessarily investing in European stocks, but it also shows why many people are probably having a preference for US stocks, because at least you see also price appreciation there, probably more a little bit than in Europe.
Yeah, no, that's true. I mean, to be honest, thinking about it now, do you know if they are kind of sector stocks?
Well, we have, of course, certain sectors really strongly in Europe, right? And I also think that if you look at some of those top companies, those are not number one in their industries, or not number one anymore. Just think about SAP or so, if you compare that with the ServiceNow of this world, the Workdays of this world. Of course, SAP is a huge company, but they are not having the hyper growth anymore. This is with Salesforce at the moment. So I think these are probably the differences, that the other companies are better at global execution or something like that.
Yeah, good point. Just says, I think, stay globally diversified, right?
Yeah, exactly. I think that's also one of those things that we need to just keep paying attention to. But this maybe leads us also nicely into the main topic of today, because today we're going to do a stock review of Fresenius, and it's I think a great example of a German company which has seen quite some growth, right, over the years. And I also know that you know this company pretty well, so it's really nice to have you also regarding this company on the show today, because I really would love to hear also more of the about the company and such, and also to share with the community like what it is about, and for them to make up an opinion whether they would want to be invested in it. So could you explain a little bit more about Fresenius, a little bit what it is, how it operates?
I think we can summarize Fresenius a little bit as a hidden gem. And it sounds maybe a little bit strange that a lot of people do not know this company, because in the end, it's a company with more than 300,000 employees. I mean, it's not a small company.
That's huge. Yeah.
Exactly. And also very well diversified in its structure. So if we look a little bit at the company structure and the business, there are actually multiple entities of Fresenius. We have Fresenius SE as holding company. That's the biggest company. And then we have up to 4 business entities. The one is Fresenius Medical Care, focusing on dialysis machines and equipment and service products around that. And they are also, by the way, publicly traded. So you will see actually a second Fresenius Medical Care at these stock exchanges. And next to Fresenius Medical Care, we also have Fresenius Kabi, Helios, and Vamed. And it's a very nice lineup, in my opinion. And maybe at this point, also a short disclaimer. I own Fresenius SE. And just to be transparent with everybody.
Yeah, no, super. Look, it's actually really good. So you know what you're talking about, right? From that point of view. That's also good in case people are thinking that they hear some bias. But what I said, if you think about Fresenius, and what I like about it is that it has a really nice dividend history. One of those companies in Europe with a good dividend history. And is this also one of the reasons why you're invested in them? And what do you like about it from that point of view?
The dividend history was certainly one reason, exactly. Second point was that there are not that many pharma companies or healthcare related companies in Germany. So I wanted to have some exposure locally in this business. And when I started to look into them, and they had a nice diversification between the different business units, it somehow made a good picture.
Yeah. Okay. Hey, and how do people in the street, let's say, to think about Mr. Lynch? How should people in the street know this company? Because you meant 300,000 employees and such. So as Europeans, what can we know it from?
Well, if you have some kidney disease, most likely you will know Fresenius from the dialysis business. I mean, they are, in that perspective, the biggest company worldwide for this kind of medical equipment. In Germany, you might know the Helios hospitals. They are big, or maybe even the biggest privately owned hospital chain in Germany. But they also expanded a lot worldwide. They have acquired a couple of hospitals in Spain, in Colombia, and to be honest, I don't know where they are not. They bought a lot over the years. So from that perspective, I think you might know Helios from the hospital business.
Yeah. Super. And if you then look a little bit at how you say it, at the numbers and such in the balance sheets, I think they have a quite I see it, a specific balance sheet, so to say. And what are the things that catch your attention in their balance sheet, and why is it like that?
Yeah, there are multiple aspects, of course. Since the main business, or the main holding, Fresenius SE, is a holding company, you will see, of course, a lot of numbers for its individual parts. So you always need to be careful which number is this now. Is this related to one entity only, or to the main holding? Also, for example, Fresenius SE is reporting 100% of the Fresenius medical care business in their papers, but they only have 32% of the shares.
Yeah.
So from that perspective, you always need to be careful which number do they bring in the papers. Is it now the full revenue number or not?
Yeah, and it's good that you mentioned that, because there are some awkward things in there. For instance, what we noticed is that the goodwill is really huge. And do you know where it comes from, this goodwill?
Yeah, if we jump to goodwill, it's definitely because of the massive acquisitions they had over the past. So if you look, for example, at Fresenius Helios, so the hospital chain, they bought multiple hospital chains, not only in Germany, but also in Spain, in South America. And I think it's a little bit in the nature of business. If you want to buy a hospital, that you pay a premium to that. So you add up a lot of goodwill over time. But in the end, I think it's not a big risk necessarily, especially if you think that you cannot just build a second hospital next to a well-established one somewhere. So I'm not sure if this added goodwill is a big concern from a balance sheet perspective.
Because they effectively buy stable cash flows, right?
Exactly,
With this,
exactly.
and so the return on so the return on investment is probably really the biggest here, and then the goodwill is probably of less thing, because otherwise it is about talking about is the hospital bankrupt, right? And then if you want to sell the hospital itself, the building, I can imagine that the building and those assets as such are maybe not so much worth as having the whole hospital there in the neighborhood, in the location, for the patients, right? This whole intangible thing is what creates the cash flows.
Exactly.
Yeah. Cool. And then what we also noticed is if you go into the balance sheet on the liabilities part, right, that their liabilities, their debt has been reducing, their long-term debt. At the same time, they have been issuing more bonds, but it doesn't even equal it out yet. In general, the debt has been decreasing, but at the same time, also the goodwill. So what I liked about it is that you see the stability in the write-offs going a little bit in comparison with the deleveraging, so that in the end you have kind of a stable picture on the balance sheet. Yeah. And then if we look at more like the company growth, if we look at the income statement and such, anything there that catches your attention?
Yes, Fresenius has a very stable growth over the last year. I mean, we have to certainly say that growth slowed down compared to, let's say, 2017, 2018. That's also something later when you check the long-term stock chart, that you see that there's actually a nasty dip, and that that it does not look very promising. But in itself, I mean, the hospital business is very stable. The Fresenius Kabi business with infusion material or drugs, very stable, also increasing. Free cash flow is also increasing, stable margins. So I mean, overall, it looks like a very well-run company, very efficient, stable growth. But indeed, you cannot expect now 30-40% growth numbers in a business like that. But I think that's also pretty normal. I mean, if you have a well-established hospital, it's not that you can expect next year suddenly 20% more patients, right?
Yeah. And then that's interesting because you touched a little bit also on the share prices and such. We've seen that it was trading really high, I think 2 years ago. And it almost reduced 30-40% in share price. Do you know the reason for it? First, why it went so high? And secondly, why it came down? Is it just like speculation in the market, or is there really news behind it that led to this?
Yeah, I think before 2018, the market was used to good growth numbers. That was also the time, when the dividend was increased in big steps. But suddenly in 2018, they brought two reduced warnings or reduced earnings out. End of 2018, they also had a failed acquisition with Acorn, an US-based hospital chain. So a lot of things came suddenly in the second half of 2018. I also looked back to some speeches of the CEO in 2018 or beginning of 2019 to be more precise. And he said like, okay, I think we lost your trust. We need to rebuild that. And he back in the days even said he bought more stocks with his variable salary or with his bonus. So he is still fully committed. The management is still fully committed. And that was then also in the end for me the reason to have initiated the position in the low 40 euro range in 2019, and why I then also added up in the COVID dip 2020. I mean, the hospital business, of course, had been impacted by COVID. I mean, a lot of surgical things could not have been done. They needed to keep beds empty for COVID patients. I mean, they were really at the front line from that perspective. But overall, the business is still pretty stable.
Yeah.
So
it's interesting that you say this about the CEO, because it was the same that the Bayer CEO was saying, right? We need to regain trust, rebuild trust.
Yes.
And I guess there the Monsanto deal is just the worst acquisition in the history of Europe, probably. So it's probably not fair to compare Fresenius to such kind of event.
Yes and no. I mean, I was reading a little bit more about the details, what happened with Acorn. So indeed, they wanted to acquire the hospital chain, right? But suddenly they found out that some things in the books did not add up, that Acorn did some shady things with the FDA. So Fresenius in the end said, oh no, we do not want to buy you anymore. And they got sued by Acorn. Yeah. And in the end, it turned out pretty positively for Fresenius, I have to say. And US-based court said, okay, the acquisition is now off the table. You do not need to buy them anymore. And then looking through the details, I mean, I'm no law expert. They talk about an MAC clause. I have no idea what the details are about, but I was wondering, like, okay, maybe Bayer should have hired the lawyers from Fresenius to somehow play the same game.
Hey, in the end, these are management decisions, and Fresenius seems to be capable to have these kinds of, backstops in their strategy.
Yes.
So I think that's a compliment in itself. And if you make a mistake, at least they have been able to, I said, avoid really big pains out of it, which Bayer
Exactly.
certainly wasn't able to do. So it shows the difference in competence, I would say. If we also then, how you say it, look at some growth factors, I believe that Helios is still looking at more acquisitions and such for specialized hospitals with fertility treatments. And I understood Kabi is also really looking at a second biosimilar. And biosimilars are really interesting because I think they are so hard to produce and they're so often so overrated, because sometimes I have a feeling that the regular investors think like, oh, biosimilar will take off the revenue of the of the main how is it drug in the market, but then at the same time they in their mind they look at it as generics, right? Like if it would be producing in paracetamol or something like that. And so I'm really curious about what will happen here around Kabi with this and how easily it will go and be.
Yeah, I'm also very excited about that. And if you listen to the CEO speeches, it's also for them very exciting new business. It's
Yeah.
really a new field for them. And
Yeah.
I'm actually not sure if you know that. Do you know what the first biosimilar is from Fresenius?
No, I don't know.
Yeah, it is actually for Humira from AbbVie.
Ah, that's really, really interesting. So, with that, if you have also AbbVie, you have the one that's eating
Exactly.
AbbVie's lunch. You're the on the receiver end there.
Exactly,
Ah,
exactly.
but that's
So
also sometimes nice to look at it like that, right? From an investing point of view. If you, for instance, um, what if you were afraid that Apple would take over Microsoft's position in the past? Buy both. Yeah, if the Microsoft would be the more stable at the time, and then take the grower, and you know that you have one of the winners, right?
exactly.
Yeah. Ah, cool. So if you then now look, we have discussed a little bit the company, the business behind it, that it's like I guess a European blue chip. The high growth period is over. It's more in the slow growth phase now from that point of view. We've looked at the balance sheet, the income statement, and such that statements. Balance sheet is a little bit like pay attention to the goodwill and the debt, but the debt figures overall don't look bad. They look actually quite okay, also related to the whole balance sheet. So then the question is, what about the dividend quality and the dividend stability? Can we trust this management on the dividends? Yeah. So is there, for instance, a clear dividend policy, or is the typical European dividend policy? What
They
are your
actually,
thoughts there?
yeah, they actually say a little bit more what they want to do. They have a dividend policy, and I trust the management to that.
Mm-hmm.
So looking at the dividend history, 28 years of increasing in dividends.
Mm-hmm.
I think it's one of the rare dividend aristocrats in Germany. I
Yeah.
think it's only 8 to maximum 10 companies that have this track record in Germany, and Fresenius is one out of them. But still, the payout is actually very conservative. I think their target corridor, let me look it up, I think between 25 and 30%. I mean, it's really very conservative.
Yeah.
And the growth of the dividend is very often mapped to the growth of the earnings.
Mm-hmm.
So with that, we already get a little bit of an estimate, which dividend increase can we expect.
Yeah.
And that's certainly something that also slowed down a tiny little bit in the last couple of years, because the earnings did not grow that fast anymore. But still, I mean,
But do you expect this as a company that if they will have 2-3 bad years after a row, that they will also cut the dividend in line with the earnings decline or something like that?
I don't hope so. Of course, you should never hope in that perspective. But I think the management is very, very much committed to that. When I looked again at the speech of the CEO 2018, or 2019, reporting back to 2018, where they had big concerns of the revised earnings and earnings warnings, they still said they want to keep it up.
Yeah. Okay. Hey, and the Fresenius SE, the holding company, currently trades around 2% yield because they have a dividend of 88 cents on a share price around slightly below €45. What is also interesting maybe is a little bit to look at medical care, right? The Fresenius Medical Care, this subsidiary, because that one has been paying a dividend actually since 1997 and has been growing their dividend also quite a lot. So I think in 1997 they issued the first dividend around 20 cents, and now it's around 136. So it's a 10 bagger almost from that point of view. They had a bit of a growth slowdown in 2012, 13, 14, 15. I think that was like the rest of Europe. But they also have at the moment 1.9 dividend yield, so not so much away from the parent, and a 33% payout ratio. And it trades for a multiple around 18. So I guess it's fair to say that you could go for Fresenius SE, and with that you also earn Fresenius Medical Care, but maybe the growth or something like that, or the, let's say, the risk reward could be more interesting for few people also to look into medical care more. So you get maybe a more one-trick pony from that point of view, but also probably with a higher potential reward behind it because of less diversification.
I think that summarizes it's very well. So Fresenius Medical Care is indeed biggest company for a dialysis business, but they still have some nice growth vectors. They launched, if I remember it correctly, a very cost-optimized, cost-competitive dialysis machine for Asian countries, for example. But they have indeed a different growth vector for the Western Hemisphere, where they rather shift from hospital treatment to home dialysis, for example.
Yeah.
Of course, that's especially now also in the COVID time, I think interesting. You do not want to go necessarily to a hospital if you don't have to. But yeah, people with kidney diseases need to go. So it's actually
super.
an interesting business indeed. But I personally feel a little bit more comfortable indeed with the SE business or the hospital part in it as well.
Yeah.
And the Kabi business.
So to conclude, my personal opinion is like 2% yield. It's interesting. I see the dividend is safe, also due to the low payout ratio. I think they are pretty well managed from a financial point of view. There are some highlights to be alert on. And actually, I need to update the Noble 30 index. So definitely Fresenius belongs in there. So I hope in the upcoming weeks some time to do a post about it and to give it its place that it deserves.
Yay.
And then how about you? What is your final summary about Fresenius? If you think about people that would be considering it now, is it something that you find interesting or actually not at the moment? Yeah.
No, I mean, for the current prices, as always, something you need to look into. I felt a little bit more comfortable with the lower 40s price tag that we had some time ago. You get indeed a solid 2% dividend yield, double-digit dividend growth rate.
Yeah.
Looking back, I mean, that in itself looks good. But indeed, with the debt and goodwill structure, I mean, yeah, you definitely need to look into that if you're comfortable with that.
Yeah. Okay.
But other than that, very nice and diversified business in different segments in the medical sector.
Yeah. Super. Okay, so that concludes then Fresenius. I hope the listeners enjoyed this one to discuss again a European stock and go a little bit deeper into it. But now we also go to another special section, which is called the listener questions, and usually are first. But today we have Engineer My Freedom as the first listener question. And he is asking us, what is the one investment decision you would have done differently this year? Any thoughts there from your side?
Definitely. I mean, if I could turn time back a little bit, I would have a more consistent investment schedule. Let's put it that way.
Yeah. So you have a feeling that you are... so you're feeling that you were underinvesting, I guess.
Yes, definitely. I was very reluctant in the beginning of the year. And of course, looking back, it's always easy to say should have, could have, would have, right? But I think especially from that perspective, it's just important to invest regularly.
Yeah. So my look back here is that I should have bought more Ahold. I bought quite a bit actually, and I didn't want to spend too much cash on it further at that time, thinking I did already enough. But I want to. Why didn't I use my option strategy? I could have sold a put option to fund a call option so that it would be cost neutral, and then thinking like, okay, you know what? Or I buy it for 20% lower, or I buy it for 10 or 20% higher, like half a year later, like now, and I would still lock in kind of the price from that time almost. So I wish I would have done that at the time. So yeah, but this is what investing is. Yeah,
Exactly.
so the next question is from Nineok, and he is asking us whether we follow GlaxoSmithKline, GSK, because they have announced their future dividend policy also related to the new company. I believe that they're spinning off. Any thoughts around that from your side?
Definitely. I followed GSK over the last couple of months. I mean, certainly spikes out if you see the dividend yield in the 7%, 8% range, what it was a couple of weeks ago. And yeah, they already announced this a spin-off last year, or that there would be happening something like that. And indeed, last week we got the firm details what will be happening.
Yeah.
And especially for the dividend policy, it means next year, if we combine the, let's call it new GSK plus consumer health business, the total dividend of the two elements will be only 80% to the levels that we have this year. So with GSK, you will definitely get a dividend cut. It looks a little bit similar to what we have with AT&T, right?
Yeah,
We will soon
exactly.
have a spin-off, or the company splitting off some business entities, and the new dividend will be lower to the dividend that we have that year.
Yeah, I mean, if you're a GSK and shareholder, and depending on the income, I think this is really, really not nice. But I understand why GSK does it, and I actually also understood why AT&T does it. Always the question is like how management was communicating, right, around this. So yeah, to all the shareholders out there that will need to take a 20% cut on their paycheck, feel with you. Definitely.
Exactly. And to be honest, I have to say I was hoping that the stock price would go down a bit after this big announcement. Actually, it did not. Not significantly. For me, in the overall investment strategy, it would be nice to have another UK-based company. I'm not sure if I like the medicals or the new GSK part better, or the consumer health. But yeah, I still keep it on the radar. The change will be next year, so there's enough time to make the decision. If I want to get engaged with both companies, then I can still buy let's say the old GSK. And otherwise, yeah, I will see it over the year. I still have it on the watch list, certainly.
Yeah, super. Okay, so the next question is from Chris Gets Vaccinated. He is asking, is the right play to put higher yielding stocks inside a retirement account while keeping lower yield more growth outside, or should I think in total return? He's saying it's from the United States, so 15% dividend tax outside the retirement accounts. I think this is an interesting question. So we just opened the retirement account here. So this is really about tax efficiency investing, right? Tax efficient investing. And if you have a certain amount of money that you can put in your tax account, but besides that, you will need to invest more in in a normal account, then I would definitely put the higher yielding stocks in the tax-free account, because you have less impact from the dividend tax. So I would definitely follow that approach then, and have the more low yield, high growth into your open account. That's how I would look at it, and that's how I'm looking at it as well, because you just benefit from all those dividends being not taxed. Okay, and then the last question from today is from Rafa, and he is asking, what would you prefer to own, Nike or LVMH, Louis Vuitton? And he says you can only choose one and dream that you can get it at fair value. Which one would you choose, Phil?
I think it would be LVMH. It's a big company, a lot of brands, a lot of history with the brands that you cannot just copy. Well diversified. Yeah, just from that perspective, I most likely would buy them.
And a great CEO, right? Really great CEO. So I think he's one of the richest in the world, right?
Yeah, that can be.
Yeah.
That can be. And there was also recently some news that they want to work together with Google. Was it like that? The new digital strategy? I only heard it at the site.
Yeah.
There was something in the news about them and then tech stock.
Yeah. Now, so for me, it's definitely Nike, for the simple fact that I think Nike has the youth on their side, and still now, the youth prefers Nike brands, yeah, the Nike shoes and everything. So it's for me so powerful. And with Louis Vuitton, it is always for me a bit in the luxury category. But anyone wants to own Nikes. Poor, rich, everyone wants Nike. So I think from that point of view, I would go for Nike at fair value. Definitely, I would go full in. Definitely. Okay, thank you all for all the listeners' questions. Really nice ones again, and always happy to answer them. So thank you for that. And let's move then quickly to the last section of today, and it's a stock pick. So we spoke already about Fresenius. I will go to a total different company now in the financial sector, and it's BlackRock. BlackRock triggered my attention this week when I saw a really nice chart that showed like how much of the ETFs BlackRock owns that are being bought by I know pension funds and all the buyers. It's just simply insane how much market share they have, and it's not just Europe, it's also in the States where they have a market share of 36%. So they are much bigger than Vanguard, as an example, or Fidelity. If you're talking about a market leader, BlackRock is a market leader in this industry. It trades at the moment around $875. It has been stable growth, nothing like no zigzagging or something like that, just more like with the market. And what I also like about it is they have a 17 years dividend growth history, yielding currently around 1.9%. It's for me always on the low end. It doesn't add to my screener. However, the 5-year dividend growth rate is slightly above 11%. So this is for me such an example of a company which is low yield, high growth, but which is interesting enough, because if you then really think about it, getting as quick as possible to a 10% yield on cost is achievable still with this yield if they can keep up the dividend growth track record. Payout ratio is 44%, so they should have room for growth. It's just a company for me that I like a lot. I think people should still do their homework going into the financial statements and such. But it's a company in the financial sector that caught my attention, and that I might go a little bit deeper into it to start building my understanding. Like, is this the one that I could have in my portfolio? Because it seems to be like the Microsoft or the Apple of the industry.
Yeah, the stock price. Wow, $870. Do you see there any issues building up a position? Because I mean, it's not that you can slice it in nice parts. I mean, it's immediately $800, $1,600, $2,400, right?
Yeah,
and it only gets worse over time, I guess.
No, I don't have issues there because my monthly contribution to the stock market is more than that. So for sure, I could buy one share every month if I wanted to. So no, I don't have issues actually with that. I would have issues with Amazon or Google, but not with BlackRock. But I understand your point. The stock split would make it easier for people earlier on in the journey, because if you would have asked me in the first month, I would have probably not. I would have shied away from it. And then also, if you can't buy fractional shares, so yeah, it would be good for them then to do a stock split.
Yeah. And did you actually hear any conspiracy theories about BlackRock? I mean, they have a big big power, right? If it comes to
Yeah,
voting
effectively,
rights
they just
and
own the capital
exactly.
markets. Yeah, yeah, yeah. I haven't heard. I mean, do you want to be in the half glass bottom of the water, right? Of the glass of water on the top. I just know that when I read, because that's the interest for me. I've been reading the shareholder letters and the shareholder comments. I have a feeling that this guy is really having the right integrity. Yeah, it's easy to say when you own the world. Yeah, but yeah, benefit of the doubt. It is they have a lot of influence in boards and everything, which is interesting. Maybe it's more even interesting to become an employee there and get all these board seats, and that would be probably more interesting from career point of view. Then, but yeah, do you have any special thoughts about that, or?
I don't know.
Yeah,
To be honest, maybe something that we will never know what's happening behind
yeah,
the curtain, right?
yeah,
But certainly, it's interesting to think about it. What happens behind this the curtain?
yeah,
If they can really use all the votes to their advantage that they get basically from ETF investments, right? I mean,
yeah. Yeah, well, what is interesting that if BlackRock is a real wants to be a dividend aristocrat, then they will need growing dividends. So they will need growing dividends, maybe also a little bit from the companies. Maybe they can put some fees below it so that it doesn't go all to their clients, but they also earn something. Who knows? Maybe it can work in our advantage.
exactly.
Super. Hey, we came to the end of the show, Phil. Thank you so much for joining me today. I think you allowed EMF to have a great camping trip this week, I believe. So thank you so much for always being with us. I'll treat you already as one of the Dividend Talk sidekicks or members. I don't know how to call it, but thank you so much
It
for
was a
today.
great pleasure, certainly. Thanks a lot.
Super. Well, to all the listeners in Europe, I mean, I think it's all over the place. It's great weather. The summer's really hot and starting. Get a refreshment, go to the swimming pool wherever you are, but please take your earphones with you so that you can listen to the next Dividend Talk again.
Yes, and
So,
don't forget sunscreen,
exactly. Don't
especially
forget
to the people
sunscreen.
in Ireland over there. If you suddenly have a nice week, don't forget your sunscreen, please.
Yeah, we should put the UPS shipping
Exactly.
quickly to EMF with some sunscreen factor 50 or so.
Yeah.
Good call out. Okay, guys, all have a great week and see you at the next Dividend Talk.